We can now start. Yeah, Namaskar. Good afternoon. Good evening, rather. We are towards the verge of evening. So it's a pleasure that to see all of you joining in with us for this webinar today. This is a great, I would say that our chairman is behind all such activities. So it's our privilege to have our chairman, Professional Development CPE Committee, Shri M.K. Anand ji, Manoj Kumar Anand ji, always guiding force behind such programs. So, and we are very much privileged to have with us Mr. Andre Sanseverino. He is Vice President Sales and Marketing, my ABCM. So we are privileged to have him with us today afternoon for this webinar. So today we would be requesting our learned speaker to talk on the subject the future of winning organizations with true cost and profit management strategies. This is a very important topic for all our members to understand what is the true cost and how what could be the right strategies for profit management. So we have a great speaker for this. He would be presenting his perspective on this topic. Before we take this webinar forward, I would request our chairman, Shri M.K. Anand ji, to give his opening remarks and to encourage all the participants present here.
Thank you very much, Nishaji, for your very brief introduction. I welcome Mr. Andre in our this seminar. You see, Mr. Andre, this is attended by all over India, my fellow professional colleagues from all over India. First of all, I thank you very much for sparing your time to be with our members. You see, world over, as India is gradually inching towards becoming the third largest economy in the world, you see, we are depending very heavily on our professional members and also on understanding the mystery of cost and management, basically. You see, world over, as you are surely aware about it, that financial accounting is one part, but the cost and management accounting is gaining very heavy importance now, and particularly in developing economies, this is of a great relevance. You see, we are very grateful to you for sharing certain cost and management strategies because most of the firms, particularly in Europe and USA, are thriving very heavily by depending on such strategies. So we are also looking forward that our professional colleagues will benefit and they will also start learning in such techniques and such strategies. And then by implementing them, we will be in a position to deliver good for our clients and ultimately for our organizations. Once again, I really thank you very much and I look forward to see you in person, maybe in another 3 to 4 months, depending on your availability and to welcome you in India. I once again thank you and I leave the floor to you. You may kindly tell us that how you plan to speak out, and then this is going to be an interactive session after you finish, and then we can go ahead with questions and answers. Thank you very much for agreeing to our this request. Nishaji, thank you.
Yeah. Thank you so much, sir. Um, I would request my team member, Ms. Nidhi Verma, to give a brief introduction of the speaker before we proceed for the session.
Thank you, ma'am. Before I request our speaker to start deliberation, I would like to briefly introduce him. Andre Sensibrino started his professional career at NY in Sao Paulo. He was one of the founder of My ABCM in 1993, leading global projects for the implementation of strategic cost and performance management in companies such as Coca-Cola, Philips, Cadbury, Swap, Motorola, and Mobil Oil. He is an international speaker on this subject, having taught classes in Latin America, the US, Europe, the Middle East, and Asia. A professor at postgraduate and master's degree in Brazil, he is currently responsible for the company's global sales and marketing. We welcome you, sir, and request you to start the deliberation. Over to you, sir.
Thank you very
Thank
much.
you, Nick.
Thank you very much. It's a pleasure to be here with you this afternoon for you, this morning for me. I'm calling directly from our office in São Paulo, Brazil. Mr. Anand, thank you very much. It's a pleasure to be with you. Thank you for the invite. Let me start with the agenda that we planned for this meeting. I will quickly introduce you to MyIBCM, what is the company, just one single slide. Then we go to some quick concepts, what the winning organizations worldwide, what they are doing in terms of cost management and profitability. Then we will show you a practical sample. So it's a practical, I picked food manufacturing sample to show you this afternoon, actually. Then we go to the future of cost management. I think the future of cost management is try to integrate cost management techniques with AI. So I want to present you a topic on this integration between cost management and AI. What is our view? What we plan for the future? And this is it. So this is basically the agenda. Let me start with a very interesting topic. 2005 was the year that YouTube was firstly launched. If you look at that time, 2005, the revenue of these two major car manufacturing companies was, for General Motors, was $193 billion worldwide. And for Toyota, it was $172 billion worldwide. Now, this is revenue figures. If we talk about profitability, the profitability for General Motors was $4 billion, and for Toyota was $12 billion. The big question here is, how come Toyota had about $20 billion revenue, less revenue than General Motors compared to General Motors worldwide, and at the same time, 3 times the net profit, the net final profit? What is the secret here? The secret is absolutely cost management. So Toyota was more effective in terms of dealing with the processes, doing less rework, doing less activities in duplicity, knowing exactly for which product they should sell to which customer. They understand the cost to serve. So that's basically the explanation. They were controlling very well processes and activities. Let's talk very quickly about MyIBCM. MyIBCM is a software company. We are a technology company that in the past 30 years we are dealing with cost and profitability analytics. We have more than 1,000 clients in 50 countries. We just launched an operation in New Delhi, in your beautiful country. I'm moving to October, in the end of October, to visit our operation there. So it will be a pleasure to meet you personally. We have clients ranging from manufacturing to services to banks to insurance companies, telcos, public sector, logistic organizations, education. We have global partnership with major consulting firms who uses MyIBCM for their projects, and we also have a global partnership with Microsoft and with SAP, particularly with SAP, and that's an interesting one. The question that normally arises when we show this slide is, okay, we do have SAP. We finally have our processes mapped. We have our cost center and cost account structures defined. We have the inventory position. We have sales volume. We have production volume. Why do we need MyIBCM? Normally, when we talk about a cost information on an ERP, this is much more related to accounting things, statutory accounting, paying taxes. Now, when you need to really understand what you do, what you have to do with your indirect expenses, your overhead expenses, or if you want to define not only product and service costs, but also understand other dimensions like channels, segments, clients, students, patients, surgeries. If you want to understand other dimensions, not only have two choices. You can either try to customize the ERP, and we know this is very expensive. This is hard to do. You need a lot of people to work in this project, or you try to use Excel, as Microsoft Excel, try to use spreadsheets. So it's pretty challenging having mid-size or large organizations and work with Excel, and we will show this later on. The topic that we work with is absolutely in the CFO agenda. Recent research from Duke University in the United States showed that with 848 CFOs asked, what are the top 3 internal company-specific concerns for your company? And the number 1 was ability to maintain margins. At the same time, another research from Gartner asked for 482 CFOs, what is your top technology constraint? And number 1 was measuring product and customer profitability. We know it's not easy. Another research from CFO Magazine asked what is the top challenging facing CFOs, and absolutely the answer was how to cut costs and manage expenses. We know that the margins are being pressed, are being squeezed by several factors. The margins are going down because more competitors, we have supply chain crisis, we have pressures in terms of regulatory issues, we have more taxes, we have all this environmental agenda. You know, environmental agenda is something that it's not new, but now it's very strong everywhere. More demanding customers, we have to translate somehow the customer's demand into effort, and we have to translate this effort into cost. Sure, it's cost. So we have to understand that, the cost to serve. We have a lot of conflicts, we have wars, we have economic pressures, political pressures. So these margins are going down. I don't have yet the number for India, but here in my country, here in Brazil, they made a research with the top 500 companies in the country in the past 10 years. So it's a pretty decent study, pretty solid study. And the conclusion was that the net margin, the very last row for these top 500 companies in the past 10 years was 2.3%, 2.3%, which means less than 3%. Which means that the margin is going down very quickly. If you look at this organization, very important in US and worldwide, in the past 20 years, their revenue come from $30 billion to $89 billion, 3 times the revenue they had 20 years ago. But if you look at the net margin decreased from 7.5% to 1.9%, less than 2%, which means that things are going very dangerous for this organization in terms of net margin. Now, the 3 things that we do know, if we ask for a company owner or a CFO or a controller or the chief of FP&A, how was your total expenses last year? How was your total revenue? And how much was your total profit or loss? They will certainly, they can certainly answer this question. But we are talking about the total figures. So my expenses last year was $800 million. My revenue was $1 billion, and my total profit was $200 million. Now, the question is, how can we understand those figures? Not the total amount, but this by something that we call dimension. We need to understand those figures, not only the revenue, but also the cost and the profit by client, by service, by product family, by product SKU, by distribution channel, by branches, by suppliers, by distribution centers, regions, whatever dimension we have to understand in order to better manage our organization. Another interesting thing is that when we look at the clients, let's look at the clients that we have. Let's say we have like 1,000 clients. Sometimes what we think is a good client is a bad client at the same time. What I mean by that, sometimes a good client in terms of revenue is a very bad client in terms of profitability. So understanding cost to serve is something very important. Research back in 2001 from Harvard produced these facts. If you look at the clients of any organizations, about 20% of their clients, they generate between 150 and 300% of the total profit. 70% of the clients are neutral and 10% are money losers. Now the question is, which one of them? Which one are the good clients? Which one are the bad clients? I would say that actually we have two questions here. The very first one is trying to understand who are the good clients and who are the bad clients. The second very interesting question is, what can we do with this information? Because I was reading a paper another day. The paper title was "Fire Up Your Client." I think this is a very romantic view. Fire up your client. What happens if we, for example, we decide to not attaining anymore the 10% of the money losers client? What happens is, because our fixed expense is very flexible, this very same fixed expense or fixed cost, the moment that we do not have these money loser clients, we start to assign this fixed expense or fixed cost to neutral client or to profitable client. So what happens next? Your neutral client, you start losing money. Your very profitable client, you start to make them neutral. So I would say that we don't have to use cost information as a weapon. I prefer to use cost information as a toolbox that we decide what is better to do with the cost information. Another interesting thing is that if you look at the cost components of a product of a company, the direct expenses like the raw material, the direct manpower, the inventory position, this is something easy to understand. The question is, what happens below the waterline? What happens in terms of corrective maintenance, in terms of non-value added activities, in terms of activities made in duplicity, activities that you are reworking, reprocessing? Those activities, they represent a lot of money for the organizations. And since our margins are going down, we have to take care about this knowledge. We have to understand what to do with these non-value added activities. Now, if you look at the past 50, 60, 70 years also, the cost component changed dramatically. So we used to spend very little money on IT. Today, people spend a lot of money on IT, on information technology. If you look at the materials, if you look at the direct manpower, these components are decreasing, and this is pretty logic. The more you spend on IT, the more you spend on robots, in RPA, in artificial intelligence, in automation, the less people you need. So basically, that's the reason, because you have less people working in the organizations. The remaining money there is something that we call overhead expenses or indirect expenses. And the overhead is something that is growing a lot. And it's growing because the organizations are more and more diverse. You have diversity in terms of products, diversity in terms of clients, diversity in terms of channels, diversity in terms of processes. The more diverse is your organization, the higher is your expense that you spend in your back office. The higher is your IT, the higher is your legal department. So the big question for us that work with cost is, okay, if we want to assign the direct manpower or the materials, the raw material, this is easy. It's just there. Now, how can we assign correctly the overhead expenses or the IT expenses? People are either not assigning overhead at all, they are doing kind of contribution margin analysis, or they are assigning overhead based on very basic drivers like volume, like revenue, or they are doing worst. They are assigning the overhead based on the feeling. Oh, let's assign 70% to that product family, 30% to that product family, or 60-40, or let's spread this butter on the bread like this. So the challenge here is to move from the feeling to strategic management. There was this multi-billion manufacturing company in Brazil. Before the project, 29% of their costs were assigned according to feeling of the managers. So we have to change this somehow. Now, talking about the impacts before and after the implementation, per our experience, between 20% and 40% of the products are money losers, and they are often undetected by the companies. Now, what are the clear impacts of this? Top management decisions, pricing decisions, discount policies, and sales commissions. So we are absolutely all wrong. We are taking wrong decisions in terms of pricing, providing wrong discounts, providing maybe higher discounts to money loser clients, commissioning the sales team not on a correct way. So this is basically the challenges we've been facing in the past years. Now, talking about the technology, there was a research from Accenture that said that this is a global problem. This is not an Indian problem or a Brazilian problem or American problem or European problem. 60% of the organizations cannot answer basic questions about business performance. They cannot answer how much costs exactly a product or a service or a channel or a business unit or a client. And 80% of the resource time in finance is basically spent in data massage or data gathering or doing spreadsheets or doing selects or doing Proc V, Proc H. So people in finance, they're doing a lot of manual job, and they are not doing intellectual work. They are not thinking about how can we produce better insights to the management? How can I produce a better simulation, what if analysis to my vice president? They are not doing that because they don't have time. They are absolutely consumed by manual work. So what are the common scenarios when we visit the organizations? The very first one is a lack of confidence in information. Nobody really trusts on how much costs a product, a service, a channel. Also, a lot of questionable rules of cost allocation, a lot of volume-based assignment path, diversity of systems for decision making. We have a client, a global client, that entitled this project not as a cost management project. They entitled this project as the project one single version of the truth. Because whenever they need a piece of information to take decision, they look at the ERP, and the ERP gave them one number. They look at the BI, and BI showed a second number. They look at the FP&A spreadsheet, and the FP&A spreadsheet produced a third conclusion. So they have to have one single version of the truth. It's very difficult to understand the cost to serve. So a lack of knowledge about who are the good and bad clients in terms of profitability, because understanding who are the good and bad clients in terms of revenue is something easy. It's just look at your invoice. But now, how much is the effort that the clients are demanding for our organization? It's very difficult to perform traceability studies to understand what is the source of that particular cost. It's very difficult to perform what-if analysis, playing simulations, making planning. It's also very difficult to understand capacity cost. How much is my idle capacity cost, and what can I do with this idle capacity cost? Should I assign this idle capacity cost to my products or not? Is that something that the company should pay for, or should we assign this idle capacity to products in order to price correctly the products? So those are the challenges the companies are facing today. And how they fix these challenges? Well, again, they try to customize the ERP or generate some tables, put these tables on BI, or they're using Microsoft Excel. And we just finished a project in a big major bank here in Brazil. They used to have, before the project, they used to have 3,000 linked spreadsheets. 3,000 linked spreadsheets. So imagine the nightmare of dealing with 3,000 linked spreadsheets if you want to understand the cost of your products, the cost of your company, the cost of your clients. We know that these spreadsheets, they get old very easily. We are all the time creating new products, new channels, new clients, and it's very difficult to update those spreadsheets. And at the end of the day, what we find is that the finance people, the controller, the FP&A people, the cost managers, they have an extreme dependency on IT and external consultants. So they have this lack of autonomy. I'm going to show you now a practical example of a cost model for a food manufacturing company. In this practical example, we will work with the model. So the very first step is the model component. That's why, and it's important to say that the accountants are our partners in such projects. So we have a partner program here, and this partner program, we work with the accountants. They help us to develop, to design this cost model for their clients. Once we have this model designed, then we are able to make the analysis. And the analyses are as good as my model is designed. And basically, this is what differentiates MyIBCM than BI system like Power BI or Tableau or ClickView, ClickSense. A BI shows us the analysis, shows us just the report, the final report, but they don't have the model component. So they're basically reading tables. It's very different than having a model, define the model, calculate the model, and make this model available to a BI system. Also, we will talk about what-if analysis and simulations and planning, and everything should be integrated with your corporate data. How a cost management project and profitability project works in reality, in practical example. We start defining the outputs. What are the outputs? What we want to calculate? If we are a manufacturing company, we will definitely have the products, the SKUs, the plants, the channels, the clients, the regions. If you're a bank, here you are going to put the products, the bank products, the services, the branches, the segments, the projects. If you are an IT organization, IT department, maybe you can include in the outputs here the services catalog, the IT services catalog, the internal clients. We have many hospitals using MyIBCM. So here in output, they have the patients, they have the surgeries, they have the exams, they have the procedures, they have the machines. We have universities. Here in output, you can have the students, you can have the campus, you can have the disciplines, the rooms. So basically, you start thinking about the outputs. At the same time, you have some inputs. You have all the salaries of the organization. You have all the direct expenses. You have all the cost centers, cost accounts. You have the depreciation. You have water. You have electricity. You have travel. You have bonus. You have all the cost accounts for your organization. Now, one interesting thing is that this is not just a cost model. I know the secret here is to make a good cost management project, but this is not just cost or just expense. Here you also include the revenue information, and you assign the revenue information because at the end of the day, what we want to produce, to generate a P&L, a complete P&L reporting. So if you want the P&L reporting, it's not just the cost information. We also need revenue information. So once we define the outputs, once we define the inputs, it's time to make the assignment paths. And here with these green arrows, you are defining which source should be assigned to which destination. So you assign the inputs to the outputs. We have many clients doing something like this, a classical absorption approach. Now, if you want to sophisticate this model, just put something in the middle called processes. Now you are able to do the ABC to make the activity-based costing or activity-based management. Now the inputs, they are still being assigned to the outputs, but they are passing through processes before reaching the outputs. So this is basically the management, the cost management model. We can fill this model with a lot of colored flags, a lot of colored stamps. These flags or these stamps, in these flags or these stamps, you can define, for example, you can tell to the model whether this is a fixed expense or variable expense or step fixed cost, or whether this is a value-added activity, non-value-added activity, whether this is, for example, fundamental activity or discretionary activity, whether this activity is aligned with your corporate strategy or not, whether this activity is a back office activity or a business activity. And why am I telling you that? Because at the end of the day, you can take these attributes, you can take these colored flags, colored attributes, colored stamps, and use those stamps as a dimension in your model analysis. Now it starts to be interesting. I want to see my product. I produce like a bottle of Coke, and this bottle of Coke cost me $5. I have $2 raw material. The remaining $3, I have $1 non-value-added activities and $2 non-value-added activities. So it's interesting to understand how much we have in terms of value-added and non-value-added to each product or each client or each services. So this is basically the advanced management we are proposing here. In short, and also we support here reciprocal allocation, reciprocal assignment, which means that in every organization we have IT working for human resources and working also for production. Human resources at the same time work for IT and work for production. So between IT and human resources, you have this multiple and reciprocal assignment path. So once this model is defined, the model is in the center of everything. So model is here. We start bringing information from several systems. So basically, if we have SAP, we can bring that from SAP. If we have Oracle, if we have something in-house built system built in-house, we can read that information from spreadsheets, text file, SQL Server, tables, whatever table you want to import information. Imagine, for example, we want to assign the cost of a salesman, the cost of visiting customers. And the number, we can assign this activity, let's say just an example, we can assign this visit customers activity based on the number of visits we did for each client. And where can we find that information? Maybe on the CRM. So you can bring that information directly from Salesforce, from Microsoft Dynamics, from any CRM you use there. We use an ETL component. ETL means extract, transform, and load. Basically, that's the tool we use to import data from several systems, transform that information, make from two, make descending, ascending sort, and we prepare that file to be imported into the model. Once the information is in the model, we are going to proceed here with two commands. The first one is the model calculation. We have to calculate this model. And the second one is the cube generation, because what we want at the end is to understand, is to provide information to the managers on a way they can very easily take decisions. So we want to extract information from the model and produce some management reports, management dashboards, create a what if and planning and simulations environment for the decision makers. So basically that's the example, the complete framework of what is a cost management project. You start creating the model, defining the model. Once the model is defined, then you import the data from several systems, you process this model here, and you make this data available to the final users. Let's move to the demo. And for this demo, as I told you, I want to show you a practical case of a food manufacturing company. This food manufacturing company, they produce basically chicken. This is a major global chicken manufacturing company. Basically, on the left side, we have all the departments like production, marketing, sales, maintenance, logistics and distribution, quality assurance, some back office activities like IT, like human resources. Then you have the activities and processes that you have for this organization. You have business activities like producing products, providing corrective or preventive maintenance. You have some back office activities like help desk support, like hiring people, firing people, training people, doing the payroll. So those are the processes and activities that you define. Also, you have the cost elements, the cost accounts like salaries, overtime, water, bonus, whatever cost accounts you have here. Also, you have some products, the products SKU. We sell those products to countries like France, Belgium, Germany, Switzerland. We provide these, we sell these products to customers, and we list here a couple of customers. And we have some revenue type. We receive, how do we make money? We receive money from supermarkets, retailers, distributors. Maybe we sell to the government. Government can produce some chicken in the schools, for example, in the universities. We have our plant store, so we have revenue type in terms of cash. We receive money from the final client. So this is basically the prototype that we have somehow to understand how much costs a product, how much costs a customer, how much costs an activity. So basically we are talking here about measuring resources, measuring activities and processes, and measuring the cost objects. It's impossible to manage what you cannot measure. It's impossible to manage what you cannot measure. So first we measure the things, and after that we start management, doing the appropriate management for the organization. Now, I just moved from the PowerPoint to the sample that we wanted to present you. This is the practical sample for this food manufacturing company. In the top right, we have the module costs. Every information here in MyIBCM is stored on a module. We can put these in pre-resources. Imagine the pre-resources are your cost accounts. Now, if we group the cost accounts in some logic way, like cost centers or cost pools or departments, then you have the resources. After that, you assign those resources to processes and activities. Then you have the products, then you have the clients, then you have the multidimensional combination of products and clients. You have the drivers that you are using to assign these costs for your model. Those drivers are here defined. You have the attributes. You have the members of your model. Now, this is a multidimensional model. If you want to see, for example, your SKUs, it's just click here on the SKUs. If you don't want to see the SKUs, maybe you want to see the activity dictionary. So those are all the activities you're using in your model. If you don't want to see the activities, I want to see my cost centers. Maybe I want to see my cost accounts. So let's pick here the cost accounts. I want to see the list of my clients, all my 10,000 clients, 1 million clients. Those clients are listed here. Maybe we want to see the drivers we are using in this model. So those are the cost drivers, the rules of cost allocation we use in this management model. So basically, those are the structures we are using in this model. At this point, I have no idea on how much cost those products, those services, those channels. Now, if you move to periodic information, now is the time to understanding how much cost a particular product, services, channel, or whatever dimension you want to calculate. Now, let's pick here the processes and activities. So what is the most expensive process for our organization? In this case is production. If you click on production, the most expensive activities produce products. Now the question is, why produce products is so expensive for the company? You click down here on contribution view. We just split the screen in two parts. On the right side, we have the produced products, and on the left side, we have all the contributions for produced products. All the cost accounts, the cost centers, maybe the other departments that contribute to produce products. For example, in order to produce products, what we need? We need manpower, we need salaries, we need people, we need rent, we need electricity, we need water, we need depreciation. We also need here some costs flowing from other departments, like train employees, like develop systems, like data processing, like hire employees, because people in human resources, last month, they hired people for production. And the driver they are using to assign these activities, number of hired employees. So it's pretty fair that a piece of the human resource cost flows to a particular activity. Now, I understand why produced products is so expensive for the company. What is the destination of produced products? What we can do with these produced products. You click here on the assignment view. Now produced products moved to the left, and on the right side you can see the destination. A destination could be SKU, a product SKU. A destination could be a channel, could be a client, could be a whatever dimension we want to calculate. So we can see here some sales activities are going to a particular client. We have a particular sales activity called prepare proposals, which is basically being assigned to SKUs based on the number of proposals we made for each SKU. But now, if you look at the, for example, maintenance, we have corrective maintenance is being assigned based on the number of maintenance requests per machine. Now, preventive maintenance is being assigned based on the number of hours. So on the left side, you have some activities, and those activities are being assigned to the final products, channels, services, whatever dimension you want to understand or you want to calculate. Bottom line, if you want to understand exactly how much cost a product, or how much cost a channel, or how much cost a project, or how much cost a client, you have this in a multi-dimensional view. And this multi-dimensional view involves not only cost information, but also revenue information and also profitability. So basically, you can get here the profitability per client, profitability per product, profitability per whatever dimension you want to calculate. For example, let's pick here the product family. Within the product family, you have the SKU. Now let's click on this SKU, and you have this SKU sold to this or through these channels. So if you click on the channel, you have this by country. If you click on the country, you have this by client. And here you can get exactly how much is your total cost, total profit, total revenue, unit cost, unit profit, and unit revenue. So this is basically the unit profitability of selling these air fried chicken nuggets to this customer 7, which is a customer located in Switzerland. And the sale was made through the retailer's channel. So this is basically a multi-dimensional model, and every piece of information here is stored on SQL Server database on a cube format. So it's very easy to understand and to make this data available on cubes for producing dashboards. Now, if you want to make a traceability analysis for this particular product sold to this particular client, you just click on this contribution view. You can find a particular product. If you click on the product with the right button, you click on contribution. Now you have the product, and you have all the contributions of this product. So 12% of the air fried chicken nuggets is basically producing products. Now, why produce products is so expensive? You click on go to in produce products. Now you have the produce products contributions. Now, where manpower is the most expensive cost of producing products. You click on manpower, go to, and with the contribution view, you can see all the cost accounts of manpower. So you know exactly how much cost is flowing from each account to a cost pool. This cost pool goes to a particular back office activities. This back office activity goes back to the department. Then you assign this to a product, a channel, a service, or whatever dimension you want to calculate. So this is basically the model. And it's very important to have a good model that represents what happens within the organization. And we work a lot with our partners, with our implementation partners, helping us to develop this cost model for their clients. Now, once the model is defined, once the model is finished, now is the time to analyze this model. Let's move to some interesting views we have here in MyIBCM. This is the very first one. We call this traceability analysis or traceability study. On the left side, we have some filters. For example, we want to see just the first Q, the Q1 2024. No, I want to see data from January to April or January to June. So you can select all the filters. You can analyze actual cost or budget cost or whatever dimension, whatever scenario. You can create here as many scenarios as you want. For example, here in Brazil at this time, we are facing some economic crisis. And the currency compared to the dollar is changing on a daily basis. So people are creating in my country, they are creating the scenario reals, which is our currency, reals with the dollar at 6 reals, or with the dollar at 5 reals, or with the dollar at 3 reals. Because we have a lot of raw material that people import from other countries, especially from Europe and United States, a single variation on the currency impacts a lot the traceability, impacts a lot the profitability of these organizations. So it's very important to have a lot of scenarios and play with these scenarios. Now, if you want to make the traceability analysis, it's just a matter of select what you want to understand and keep going. For example, let's look at the grilled chicken. Double-clicking grilled chicken, you find here chicken breast strips. If you click on chicken breast strips, then you have these by particular channel. If you click on distributors, you have these by country. If you click on France, if you click on customer one, so now I know exactly how much is my cost for selling this particular product to this channel, to this country, to this client. With this 127,000, we have some non-value-added activities, value-added activities. We have some back-office activities, business activities. We also have some direct expenses. Now, if you click on production, you double-click on production, you have these based on the activities. So the most expensive activities produce products, pretty logic. But the second most expensive cost is industrial process control. If you click down here, you have these by these cost pools. If you click on manpower, then you have these by cost accounts. So as you can see, you can make this traceability and understand whatever dimension you want compared to whatever you want. Cost contribution view. For example, let's pick here the grilled chicken. Let's pick a particular product like chicken breast fillet. The total cost is 910,000. The total production volume is 119,000 and the unit cost is 764. Now you can see that the unit cost of this product is 764. On the right you can see the 764, and why is 764? So the most expensive activity here is produce products. The second is production planning. We have a very interesting cost here. Corrective maintenance is 6% of my cost. Why corrective maintenance is so expensive? Why? Because basically you are using number of maintenance requests, and it was 325 maintenance requests for this product. So that's pretty logic. Here you can understand why you have this such cost in corrective maintenance. P&L analysis. For example, I want to make the P&L analysis only for distributors, only in France, only for customer number 2. Maybe you want to analyze just this product family or this product family, or only one particular product like this one. So here it's interesting because it gives you not just the accounting P&L, but the management P&L. And within this management P&L, you can maximize here your management decisions. So in the columns, you can include here all your products, your channels, your services, whatever dimension you want to calculate. Now in the rows, you can keep going and make a drill down to go deeply into your analysis. For example, we have a lot of indirect costs here in our products. Why is that? You click on indirect costs and you have these by process. So we have a lot of maintenance costs. You click on maintenance and you have corrective maintenance and preventive maintenance, which are my activities. If you click on corrective maintenance, you have these by cost pool. If you click on manpower, then you have the cost account. So as you can see, you can have a beautiful P&L analysis here and keep going till you reach your original cost account. So since you have the P&L analysis, you can very easily get also the dispersion analysis or make multi-dimensional analysis like this. For example, let's pick this product with this channel, in this customer, in this country, in Germany. So how much is my total profitability and how much is my unit profitability compared from January to June? People use this information. Since you have the cost information, you can use this information in order to take management decisions and make benchmark analysis. I love this benchmark part, because you can compare your performance with your peers, or you can compare your performance with plants within business units, within your company, within channels. So here you can, in the top, you are comparing basically how much you have in terms of value-added and non-value-added activities per products. In the bottom, you can see how much is you have in terms of value-added and non-value-added per channel, or per plant, or per client. Another interesting view is the total profitability per product, per channel. Normally, we can find this map on a regular BI system, but the BI system shows us just the revenue information correctly. If you look at the cost component, that's a complete different story. If you look at the profitability, it's a complete different story. Now we want to see the profitability here to selling our products to France. You click on France and you have these by SKUs. If you want to see these by product family, or you can pick here and select which products are most profitable products or least profitable products. You can very easily get that. If you want to produce a whale curve, profit cliff, or understanding the idle capacity per processes, per department, per activity. Imagine, just to give you an example, I'm doing in my company the corrective maintenance, and we have two products. We have product A and product B. Last month we did like 200 preventive maintenance, 200 corrective maintenance to product A, and 800 corrective maintenance to product B. So total number of corrective maintenance that we did, 1,000. The problem is that my capacity is 2,000. So I have a capacity with all my people here in my maintenance department. We have a capacity to provide 2,000 corrective maintenance per month, but I'm just making 1,000. So we have 1,000 corrective maintenance which are idle. We have some idle capacity. We have some idle cost. Here it's important first to understand how much is your idle capacity, and two, what to do with this idle capacity. Should we assign these to products in order to specify, in order to price my product, or should we not assign these to products and assign these to a separated entity like business sustaining or corporate cost? So this idle capacity cost will not affect our products in a P&L analysis. It's up to you. So it's up to the organizations to define that. You can pick some KPIs here also. You can compare, for example, the unit cost of fixed equipment, material control, and industrial process control from the past years or the past month to the current month. Now, the question here is this. We just created this, we just showed you these dashboards. So first we have to have a good model. Once we have a good model, we are able to produce these dashboards. Now the question is, how easy is it for us to create this dashboard, or how complicated for us is to create these dashboards? Because our model is a multi-dimensional model, we just created these dimensions and make these dimensions available to the final users to make their own dashboards. So let me real quick create a dashboard here in maybe less than a minute. Let's pick this tree map view. So we click on the tree map, let's pick the cost, and maybe let's pick the activities. Okay, now I have the activities for my model. Let's pick another view. I want to see the cost per maybe the channels, or maybe the cost accounts. So let's select here the cost accounts. You can even try to customize this graphic here. Maybe let's put here an evolution of something in my company. So since it's an evolution, we have to include periods in my analysis. Maybe let's put these by SKUs. Okay, let's change the graph here for another view, for this or for this. So you just select the view that you want to include in your model analysis. And finally, let's put here maybe a card view, comparing actual budget information per maybe product, maybe also per client, or maybe countries that we sell our products. Let's also include the period information here. Let's change a little bit of the design of these cards. maybe let's include here a filter or a rule. If my actual and budget difference is more than X%, put this in red or put this in color, in blue, or put this in yellow. Okay, I think it's fine now. Let's change these components here, the position, put here on the top, and put this here on the left. I think now it's okay. Maybe put a little bit to the right, and it's done. So I just took a couple of seconds, maybe less than 2 minutes, to create this dashboard. Once this dashboard is created, we are now able to export this dashboard or save this dashboard, and now this dashboard is available through the web to the final users. So the users can analyze this dashboard the way they want. So it's pretty easy to understand that information and to generate these kind of dashboards for the final users. Normally, the people that we work with, the accountants, the CFOs, the controllers, the FP&A, the planning people, the cost managers, they like very much this hierarchical view we can see here in this model, where we start with the macro processes, activities, tasks. But when we talk to the process people prefer to see things on a BPM view. So we created a BPM component here, where you can see the value chain and you can see the cost of each one of your activities. And this is fully linked to your cost model. And you can use this for a planning and simulation as well. So to finish my presentation, let me really quick show you how people do simulations and what if analysis, how the global companies are doing cost simulations with their departments, with their companies. So this is the very first one. Imagine that we are hiring 10 more people in my IT department. The rent expense is going to increase by $10,000 next month or next year. The raw material increased by 10%. Also, we want to adjust our pricing. We will adjust our price by 10%. We want to make not many corrective maintenance. Let's maybe put some effort in our organization to make more preventive maintenance than corrective maintenance. Let's try to eliminate some non-value added activities. So we change things in the model, and we finally have this view. Here in red color are the activities that after the simulation increased by 10% or increased to more than $10,000. If you want to see your margins, your final margin, you can see that my margin was such a margin that if you compare the past with your current situation, in the past we have 5% margin. After the simulation, we are having almost 20% of the margin. If you want to see the margin per products, let's pick here the breaded chicken. Let's pick the air fried chicken breast strips for this channel, for this client, for this country. So all those simulations are very easy. Let me show you also a more sophisticated approach. In a more sophisticated approach, I'm going to simulate maybe I'm going to plan doubling my production volume next year or next quarter or next month. And let's see what happens next. So here in the graph, you can see in blue color your current production volume. In the green color, you are seeing the projected production volume for next year or for next month. So how do you do that? Imagine you're planning some marketing activities. You're planning to put to advertise your product in the best TV station in India. You're putting you're going to make some propaganda on the newspaper tomorrow. And our marketing team is telling me that after making this advertisement investment, we're going to have these volumes. The very first question we have to think about it is, can we do that? Or do we have some bottlenecks in our company? Do we have capacity to produce that amount? In this case, you can see we have some broken constraints. So in this case, we have 21 broken constraints. In other words, you have some bottlenecks. You cannot produce that amount. What are your bottlenecks? For example, we have a problem in the material control activity. We are using material control hours, and my capacity is 25,000 hours a month, and my IBCM is estimating that we need 51,000 hours of material control. That's why you cannot produce that amount. If you really want to produce that amount, you have to hire 155 new employees. Where are those employees? Well, you have 105 employees in production, you have 18 employees in logistics and distribution, you need 16 employees in maintenance, you need 8 employees in marketing, 5 employees in quality assurance, 3 in sales. And if you look at IT and human resources, you have 0. Because before the beauty here is that the back calculation is not being done equally. You're not doing evenly back calculation. Here you are considering some fixed cost and variable cost and step fixed cost. You're also considering your capacity cost. A couple of minutes ago, I showed you we were discussing here the capacity cost and what can we do with this idle capacity cost in the organization. That's one approach. That's one point of view, understanding what to do. This is the second very important use of capacity, is to put capacity in your model. And once you make this back calculation, you can have a view and you can understand whether you have some bottlenecks or not. So basically, this is the a quick example we have produced here to show you this morning. Let me move to the next topic, which is our view with the AI applied with the cost management solutions. Before move forward, just a quick comment. Everything that you saw in my IBCM, you can extract and export this to a corporate BI system. We also have some data transformation module, an ETL component that can basically read information from several systems and make this data available to the model. Now, the practical uses of generative AI applied to cost and profit analytics. Everything that I'm going to show you now is something new. We are still studying this, but I want to give you some guess. I don't have all the answers, but I have some guesses on what is the future of cost and profitability analytics linked with generative AI. As a company, as a software company, and those are some changes in perspective. Some humor here. You know what is the biggest problem with pushing all things AI is? Wrong direction. I want AI to do my laundry and dishes so that I can do art and writing, not for AI to do my art and writing so that I can do my laundry and dishes. So some changes in perspective, or in other words, do you want AI for what? What is the use? Because it's a fever. Whatever you read, you find AI. But what is the practical use? First, let's talk about security. If you want to include some AI component in our tool, in MyIBCM, we had to think about security issues. We have to create a safe solution, flexible. We have to use this with any AI mechanism and full access control. There was this, just a quick story. There was this company here in Chile. This company, the sales team decided to upload their CRM tables from the past 5 years to the ChatGPT in order to have ChatGPT producing some management reports for them. Once you make this question, use the prompt in ChatGPT, that information is publicly available to anyone. So the result here is that all the sales team was fired, from the vice president sales to the managers to the salespeople. So it was a mess. So it's important to preserve. It's important to keep the information, especially cost information, preserved within the company. So this is MyIBCM AI. How can we do that? We created a MyIBCM AI server. And basically, when you make a prompt, this prompt goes to the MyIBCM AI server. It's not go to the public. It keeps inside your organization. This is your server. It's a company server. And once you make the prompt, the information backs to the model. Some potential areas to use AI, and everything from this time on is just research. But it gives us a tip on what are the possible paths for applying cost management with AI. You can certainly apply AI with the modeling. You can certainly apply AI with analysis. You can certainly apply AI with integration, with ETL. So the main elements of a prompt, when you make a prompt to ChatGPT, basically we are thinking about the input data. So you have a trained AI server. You have the context. We call this context the smart objects, and you have the instruction. Instruction basically is your prompt. Now, what are the smart objects? Smart objects are objects trained with the best practice from the best global costing projects, also from available literature. For example, activity dictionary by departments, activities drivers, cost reduction, value-added aggregation. So let me showing you some basic use, creating and mapping activities. Imagine as an accountant, we are working in a particular client and we want to define the process or map the process or define the activities for the human resource department. You can either go to the human resource manager and start interviewing this manager, interviewing the employees, or you can use maybe these smart objects. So this prompt, I'm saying, give me 5 examples of activities for the human resource departments and some tasks for each activity. So you make the prompt and the AI gives you the activity and also the sub-activities or the process, the macro process or the process and the activities within each process. This is a very simple use. Let's move to a second interesting use. I have the activity and we want to define what is the best driver to assign this particular activity. So that's another prompt. You can tell, okay, use the smart object activity drivers and dictionary for these activities and tell me what is the best driver. And if we don't have the best driver, tell me an alternative one, like a secondary cost driver. Then you can do this. So this is pretty interesting as well and can speed up the modeling process within the company. Now, if we talk about a more sophisticated approach, let's, for example, discuss what is a value-added activity or non-value-added activity. And non-value-added activity is something that the client is paying, but if they had the choice to decide, they would prefer not paying for non-value-added activities. All the rework are non-valued activities. All the repairing, fixing, internal transportation, delays, waiting, activities made in duplicity. All those activities are non-value-added activities. Now, instead of saying to an activity, you are value-added, you are non-value-added, we prefer to classify these activities into a scale ranging from 1 to 6. So 1 is the most value-added activities and 6 is the least non-value-added activities. So at the end, what we want to put in a graph comparing cost by value-added. In this cost by value-added, we will have the best activities, which are the activities with low cost and high value-added. The worst activities that we have are the high cost and low value-added. So we want to compare those activities and see what are they located in this cost by value-added graph. So you can use this smart object saying something like this. Use the smart object value-added aggregation with these activities and tell me in which category these activities will be placed. You're certainly thinking, okay, but it's easy to get the activities and put these activities and define whether an activity is 1, 2, 3, 5, 6. Why do we need machine learning or AI to do this? It's easy because you have like 5, 6, 7 activities. Yesterday, I was talking to a bank here in Argentina, a major bank using MyBCM. They have 15 15,000 activities. 15,000 activities. We have a distribution and logistic company here. They have 2 million unique activities. Imagine doing this with 1,000 activities, for example. It's almost impossible. So at the end, you want to generate a graph like this. You want this. You want to see who are the better who are the better activities, which are the worst activities we have in the company, and things like that. Finally, imagine a smart object called cost reduction. What is a cost reduction smart object? Let's pick, for example, an activity. Again, we have like 15,000 activities or 10,000 or 1,000 activities. There's a method, and in this method, we are going to make some questions in order to reduce the cost of each activities. So the very first question is this activity required by the client? No, it's not required. Now the question is, can we eliminate this activity? Yes. So if it's yes, just eliminate the activity. If you cannot eliminate the activity, but at the same time the activity is required by the client, now the question is, can the driver frequency be reduced? Yes, if you reduce the frequency, then you can you have a cost reduction here. If you cannot reduce the frequency, the next question is, can we split this activity in steps and identify the non-value added step? Yes, if you can do this, then you eliminate non-value added step. If not, unfortunately, you cannot find any cost reduction opportunity here. Go back to the second one and make this cost analysis again. Now imagine for a second that you can teach your AI server with this logic schema, and you're going to tell to the AI, we have 4 possible actions. I will give you a list of activities, and I want you to tell me if this activity is in action number 1, action number 2, action number 3, or action number 4. That's pretty interesting, right? Because I want to prioritize all the activities that we have to, for example, to eliminate, or all the activities that we have to do less or split the steps. So we use this smart object cost reduction, and it gives you the action. So action number 1, eliminate the activities. Which are the activities that you told me? Reprocess orders, repair meters, reorder pallets, rework parts. Those activities you can eliminate. Action 2, reduce the frequency of these activities, those activities. Action 3, eliminate steps. And action 4, just with the name of activities, I cannot identify opportunities for cost reduction. It's pretty interesting, isn't it? So at the end, you have the activity rank, you know how much costs an activity, and you can start thinking about reducing your costs. Finally, how can we implement an effective cost management model within the organization? We always recommend implementation in waves. You start developing the model number 1, the model number 2, the model number 3. The more you put sophistication in your cost model, the better will be the quality for this cost model. Let me give you an example we did for Coke. We started developing the product family. Under the product family, in the second run, we calculated the product cost, the flavor. The third one was the presentation. The fourth one was channel. So we started to give some cost to serve concepts. The fifth one is the client. So basically, the better projects that we know are the projects that start with a sample first wave, and you can iterate, you can make these waves from after 1, the 2, the 3, the 4. So implementation in waves is something very important. So to finish, I want to give you a phrase from this North American author called Michael Hammer. And he said that the secret of the success is not to foresee the future, but to build an organization that is able to prosper in any of the foreseeable futures. We have to create an organization, to have an organization that is able to measure things in order to manage things. So it's impossible to manage what you cannot measure. So the information should be available easily to the managers to take decisions, especially in such difficult times or crisis times. That was my presentation. Thank you very much for your time. Thank you very much for your patience with me. I think we will open now for questions and answers. Again, we'll be in India in October, in the end of October. We have a physical office now in New Delhi. I will be very happy to meet you personally. And also, it's important to tell you that we have a partner program, a partnership program. MyIBCM is a fully partner-oriented company. We didn't reach 1,000 clients in 50 countries without partnerships. So we rely on our accountants, in our consulting firms, in our accountant partners, in order to help us to spread such an important concept, which is the ability to do appropriate cost management for the organizations. So thank you very much for your time. I'm available for you if you have any question. Again, thank you very much.
Thank you very much, Dr. Andre, for your very, very great insight into the cost and management accounting strategies. I am also here to thank my friend, Mr. Sankalp Wadhwa, who actually introduced me to you, and then that's how we have started this series. Now, if you have some time and we can have some quick questions from our participants, then maybe 10 minutes if you have a little time more at your hand.
Sure, certainly.
Okay. So if our professionals, they have any questions, they can utilize this opportunity, and surely in October also we are going to have a physical meet when you are here. I'll seek your convenience for that. So if any of our members have any questions, they can always ask. Nisha ji, are there any questions on by way of posts or something, or what?
Sir, if participants wants to ask, then they can ask, or otherwise they can email it to us. We can share that.
Okay. All right.
Yes.
So maybe they have to first absorb the vast knowledge which has been shared by Mr. Andre, the vast knowledge, and then maybe they can always
there are two questions that have been asked in the chat box.
Okay. So you can check them up, or
Yes, sir.
I'm seeing my colleague Sankalp there. Hi, Sankalp.
yeah,
Good afternoon.
There, yeah, just now I saw him.
Yeah. Thank you very much for introducing me to Mr. Anand, to the organization, and Mr. Sankalp is the country manager for India. I will have the great pleasure to be with him later October.
Sure.
Sir, one question from the participant. In complete cost management framework, where a corporation should adopt strategic cost management or total cost management, or a combination of both?
That's a good point. If you go back to the 90s, we started the company in 1994, and I came from the consulting world. I came from Ernst & Young in the past. I used to work for the consulting company Ernst & Young. What we found is that in the past, especially in the early 90s, there was the fever of ABC. So everybody was doing ABC. Sometimes they were requiring ABC, and they even didn't know what is ABC for. But because my competitor is doing ABC, I have to do ABC as well. So people start doing ABC. Now we were seeing a lot of huge, very huge models, like millions of activities. It was a fever and also a nightmare as well. Today, I think the cost models in the organizations are way more smarter than the models in the 90s. So talking about the methodology and the framework, in my opinion, what is the best model for the company? The model that works for the company. So if you have something in your organization that is very representative, is very expensive, I think you have to look carefully to that piece of information. If it's not representative and you use the better methodology or framework that is available, it doesn't matter. Because at the end of the day, what you are looking here is not the precision, is to be approximately correct. So here in a cost management, for cost management decisions, we are not looking three fields after the comma. We are looking like 3 or 4 before the comma. So imagine we have a company with the production department, and in the production department we have 100 people, and in the human resources we have 2 people. So what is more relevant, the production department? So maybe the production department is something that we have to look carefully. We have to map all the activities in the production department. Now, if you look at the human resources department, you have just 2 people. If you want to use ABC or time-driven ABC or absorption or whatever methodology or framework you want to use, at the end, the difference will be very small compared to the better framework or methodology that you can have. That's why I recommend, and we recommend, to make the implementation in waves. So the better framework is the the implementation in waves. Make the model number 1 or the model number 0, then you increase in sophistication with number 1, then you increase again to number 2, number 3, number 4, and so on. So the more you run the model, the better that will be, and the better results will be produced.
Right. Sir, one more question from the participant. How much convenient it is to continuously update this data in BI tool?
Well, the very first thing that we have to consider about BI is that BI is a layer just to present information. So in BI system, and I always remember I had an Indian professor in Kellogg in Chicago, and this professor quote and made a very smart statement. He said that these BI systems are very dangerous. They can now they are very sophisticated, and because they are very sophisticated, they can very easily produce you very wrong results. They can very easily produce very wrong results. Now, it's very easy, take any BI system and make it drill down, generate the graphics. But the big question that I want to ask here is, what is the data behind the scenes that are feeding these BI systems? So the model here is key. So it's very important to have a good model that represents what happens in your company. Now, the question is, how much convenient is to continually update this data in BI tool? If you have a BI tool already implemented in your company, we do recommend to make this data available in BI systems, because people are using BI, people are used to work with BI and take decisions based on the BI system. That's fine. You can create the model here in this framework, in this environment in MyBCM, and export the model data to the BI corporate systems. That's fine too.
Thanks. Sir, one more question from the participant. What will be the challenges of using these models in healthcare industry?
That's a good point. And healthcare is always challenging. When we talk about healthcare industry, we can think about the healthcare manufacturing organizations, and definitely one point that is critical, or one of the challenge here, is to understand the R&D cost flowing to the final products. So we want to make these understanding how can we correctly assign the research and development of this healthcare industry or this healthcare manufacturing company appropriately to our products, our services, maybe products that are still in development. We know that healthcare industry, they spend a lot of money on R&D. So this is one of the top challenges. Another top challenge is to understand the cost to serve. So we produce this medicine, and we want to understand exactly how much cost to make these drugs available in the point of sale or in the hospitals or in the pharmacies. Now, when we talk about healthcare, we can also think about hospitals. What is the challenges for hospital? Absolutely, understanding the cost per patient. Cost per patient is something very important. We were doing this project recently on a major hospital here in Brazil, and for example, they decided not to have maternity anymore. They, instead of having the maternity and having all the deliver babies or the maternity division, they decided to have the oncology, because oncology is well more profitable for them. So they did that using an ABC model and comparing and making the comparison between what happens if we keep the maternity there, or if we take the maternity out and change the maternity floor, the maternity division, by an oncology division. Sure, we have a lot of investment. The drugs are way more expensive. The equipments are way more expensive than the maternity, but you have a lot of you have much more revenue. So it's at the end of the day, they decided to have this oncology, and now they are reference hospital here in Brazil of oncology. So this is it.
Thank you, sir.
Thanks a lot for elaborate.
Thank you. Sir, one last question. Does the My ABCM tool have capacity of performing cost and profit variance analysis?
Absolutely, absolutely. You have the cost information, you have revenue information, you have the profit information. Then you can start analyzing the profit variance from several periods. You can even compare the profitability per scenarios. So imagine what is my profitability if we decide to hire 10 more people, or if the raw material increased by 10%, or what is my profitability variance from the past 24 months. Absolutely, and this is very important in order to understand, to use that information for pricing, for management decisions in general.
Thank you, sir. Any other questions?
So, Andre, this is Sankalp. I have a question.
Yes, sir.
So one question is that, so you work like in 50 countries, and in terms of sophistication of cost models, which countries do you feel are doing very sophisticated cost modeling or management accounting, and which countries you feel are like in a very nascent stage? Of course, I think you haven't worked in India yet, but from your experience outside India, what do you feel?
That's a very good point, Sankalp. I would say, let me try to rephrase the question. Who are the organizations that need this most? So who are the organizations that need cost management most? Maybe the poor countries, maybe the rich countries, maybe the poor organization or rich organization. Absolutely the poor countries or poor organization. I think we have some similarities between India and Brazil. People in Brazil, this is a matter of surviving, having a cost management project, because the margins are so low. And because the margins are so low, it's important to have control. So control is a matter of surviving in this poor country like Brazil. Also, if you have large overhead expenses, if you have large indirect expenses, so you have to have control. If you have large indirect expenses, it's very difficult to control under traditional cost accounting. So traditional cost systems are failing tremendously if you have high indirect expenses. So now answer your questions. People, for example, in Latin America in general, we are having this a lot of projects. Some parts of Europe, especially in industries with high competition, we have many clients as well. For example, insurance in Europe is a very competitive market. So whenever you have competitive market, whenever you have very low margins, it's mandatory to have control and mandatory to have cost management.
Thank you.
Thank you, sir.
Yeah, thank you very much for your very interactive session, and I'm sure our members, whatever questions they will have, they will forward to us, and then we can have some more discussions with you in this. I thank all my members also to join. I am little disappointed that I was expecting a larger gathering over here, but maybe I have really no idea as to what has happened. But still, it was a very, very interactive gathering. And once again, thank you, Mr. Andre, for your very detailed analysis and a very, very interesting analysis. It kept us on our toes to understand that what you are going to propose in the next slide and all that. So once again, thank you very much, and look forward to have much more interactions with you at the level of our institute in the near future. Thank you, and thank you all the participants for joining us. Thanks once again. Thank you very much.
Thank you very much. It was a pleasure. Namaste. Thank you.
Namaskar. Thank you very much.
Thank you.
Thanks to all.
Very much.